you think is a better investment? Get back to us. My handle is @Adam CNBC, Pauline at Pauline Chu, or you can email us, rundown@cnbcasia.com. Or maybe you don't like either of them.
Yeah, well, let's ask Alan Haft. He's our next guest. He's a partner at Kelly Haft Financial. He joins us live from Irvine, California, and we're going to dig deeper into the Alibaba numbers. Alan, when you look at the numbers, they missed on the top line, but they beat on the bottom line, earning 81 cents a share. Mobile use and sales from mobile was up 42%, so still fairly impressive. So why aren't investors impressed?
You know, this is like having a Ferrari, Pauline, and being bummed out that instead of it doing 220 miles around the bend, it only did 210. Where is the bad news on the stock? I don't see any bad news on the stock. What happened on the street today, the reason why Baba got hit in the markets is because the analyst set an expectation of about 60% top-line growth, and it only hit about 40%. And furthermore, the complaint was that a lot of that growth wasn't slow and steady during the quarter. It was really concentrated on Singles Day. But you look at all the other numbers out there, it beat earnings per share by 6%. The EBITDA is up. The profit margins are at 58%, which is growth over 50%, which is growth over 50% in the quarter prior. I don't see where the bad news on the stock. I say just buy at those dips because this is a great company for a long-term investor.
Yeah, well, to what extent then, Alan, do you think that maybe some of this sell-off has something to do with the fact that the manager, Joseph Tsai of Alibaba, is sort of taking out the punching gloves and retaliating against the allegations made by the regulators in China that they did not do enough to prevent illegal activities on their platforms?
Right, exactly. But I actually perceive that, you know, a lot of people perceive that as the negative, but I perceive that as a positive because what the Chinese government is really saying to Alibaba and to the international community is clean up your act. We want to make this as legitimate of a company as possible. This is their shining star in the Chinese economy right now. So the fact that they're coming onto Alibaba strong to say clean it up to me is a good sign that there's a lot of good things to come on the stock.
Yeah, even though Joe Tsai, the executive chairman, saying that he just thinks the methodology that was used was not correct. So he really did come out swinging. I wanted to talk about globalization because Jack Ma has talked about in the past that he wants to get beyond China and he wants to reach other countries around the globe. That's one of the long-term strategies. But then when you take a look at the numbers from Tmall Global, which allows Western companies to sell their goods online, they didn't do quite well. They didn't do very well. In fact, a Wall Street Journal study shows that 70% of those merchants got basically no transactions. So if Alibaba is trying to have this strategy of going global, you know, what's wrong with this particular platform?
No, look, it is a little bit of a concern of mine because Alibaba has, if they stayed in China and just focused on the Chinese market, less than 50% of the people in China are on mobile or on desktop. So there's such and you're talking about a population of 3 billion people. So, you know, personally, I like to see the focus in the Chinese markets. And as far as the international markets are concerned and the expansion there, I can't really say why the international markets aren't really, you know, that the growth in the international markets aren't as robust as what we're seeing in China. But again, thinking in the long term of the stock, I think just in China alone, just focusing on the Chinese market alone, that's where an investor looking to make some bang for their buck, they're focused on the Chinese market and they just look at that as alone, they won't be disappointed with where this company is headed. Does that make sense, Pauline?
It does indeed. It does indeed.
Hey, Alan, you know, we've got the buzz question out there this morning asking viewers, investors out there, traders or what have you, portfolio managers, whether Alibaba is a better investment or Amazon, which also reported after bell, and those numbers look pretty good. At least the market liked it. Is it a case of either or both of them or none of them at all?
You know, really, look, Alibaba has, it's bigger than Amazon and eBay combined. As far as my dollars are concerned, I didn't actually look at in the details in the Amazon report, but I do know that when you have a company like Alibaba that has EBITDA, profit margins 58%, I'm sure that that's kicking the pants off of Amazon. So purely on profit margin alone, my money is with Alibaba for sure in terms of if I had to pick one or the other. I mean, personally, I'm not a big fan of Amazon because of the EBITDA and the profit margins there. So I'm all in on Alibaba if I have to make my pick.
Alan, let me ask you about the Yahoo angle, because Yahoo said in their call that they are going to be spinning off their 15% stake in Alibaba into an independent holding company, give it back to the shareholders. There are reports out there saying that Alibaba may want to buy that chunk back. Do you expect that to happen, and does that make sense for Alibaba?
You know, it's a good question. I know, one of the compelling reasons why Yahoo is spinning off is because there's a tremendous tax savings if they spin off the company, and I do believe that spin-off for sure becomes an acquisition target for Alibaba. I mean, there's a lot of permutations to look at what they may do with that spin-off if they want to buy the shares and take them back. You know, honestly, I don't really know what's ahead for that. That's more of a stock play than it is it's more of a financial balance sheet play than it is really in a growth play. So I'm really focusing on the growth of Alibaba. What are those prospects? And as far as what happens with the Yahoo spinoff, to me that's just a lot of white noise. Again, I'm really just focusing on the bottom line, the profit margins. Are they increasing the mobile usage? What is the monetization, the stickiness of that mobilization? And it all looks really good to me. So I know I'm not totally answering the precise Yahoo spinoff, but again, my eyes are focused on an investment into this company, not necessarily what it looks like on what's going to happen with the shares that are being spun off into Yahoo.
Yeah, it'll be interesting to see exactly whether that fragmentation will actually pressurize the stock price moving on from here, Alan. We're going to leave it there. It was a great conversation, though. Have a great weekend.
Hey,
Alan Haff,
thanks for having me.
You're welcome. Alan Haff from Kelly.